This is Earnings Preview, a look at companies reporting during the week, along with companies which may have positive or negative earnings surprises. This earnings preview is for the week of October the 26th through the 30th. Charles Rotblatt, our senior market analyst, puts this together for us. He's with me once again. Now, if you thought that last week saw a lot of earnings being reported, more than 800 companies scheduled to release third quarter reports this week. That's a lot of companies.
It is, and we're really in the heart of earnings season. This week's going to be very busy. I expect next week to be very busy. We will start seeing a shift though towards more mid-cap and smaller cap companies as we move along with earnings season. Although this week's going to be very busy. We have over 149 companies within the S&P 500 reporting, so a lot of large cap companies reporting this week. We'll probably have in excess of 100 next week too from the S&P 500, so still a lot of large caps, but we're starting to move down the scale in terms of the importance in terms of industry leaders and market cap. Not to say there aren't some big companies reporting this week. For instance, we have Chevron and Exxon, two very large industry leaders in the oil sector.
And Dow Components as well. Third quarter mood, though, seems to be upbeat overall yet.
Well, earnings are coming in ahead of expectations. We're seeing positive surprises outnumber negative surprises by about 5 to 1. We're also seeing more companies beat than miss on the revenue front, although that margin is much smaller. But overall, we are getting earnings that are coming in ahead of expectations. That's good. Not seeing a very big reaction in the markets. We've actually been in really a tight range on the S&P, the Dow, and the NASDAQ. So we are getting numbers that are better than people thought, but we're not getting a buy on the news mentality. Rather, we're kind of getting a lot of apathy towards the earnings news. In some rare cases, we are getting a nice jump. Apple's a good example where that stock rallied on earnings. We've had some stocks pull back on earnings news, but overall, people are looking at earnings, they're looking at where the Dow is, and they're taking a step back and looking at the economy and asking themselves, is a lot of the optimism already priced into the markets?
I was going to say, do you think that there's still a fair degree of pessimism out there?
Oh, there definitely is a lot of pessimism out there, and I think we might see more of it this week. We have about $120 billion in Treasury auctions going on this week. The bid to cover ratios for those auctions, which is a measure of demand, has been very strong, and I expect it to be strong again this week. So there's still a lot of fear going on, and there's a lot of people concerned about what the actual pace of economic recovery is going to be. All this said, I think the bull is still breathing. Even though we do have resistance on the Dow at 10,160, I could see us moving above that and actually creeping towards 10,800. So I don't think this bull run in the market's over yet, but for right now, we've definitely hit a pause. Although given the extent of the rally, we've had this rally last for more than 7 months. Having a pause right now is very normal, very healthy, nothing that investors should be concerned about.
Bull still may be breathing, but how far away is the oxygen tank? That's the question. On the docket for economic news this week, there's a few interesting reports out that'll be meaningful. September durable goods orders among them.
Yeah, I think the big report, though, is going to be the third quarter GDP. We'll have our first glimpse at that. The economists right now, the general consensus is that we'll see 3.1% growth. I think really the risk to that is if we come below 3%, a 2.7, a 2.8% number. Still will be good considering where we came from, but my concern is that will ignite fear on the part of traders. When you look at the economic indicators, it does look like the economy might have stagnated a little bit in September in terms of its rebound. So we'll have to see what that number comes out as. And I think it's important for people to realize when you look at that 3.1% growth, if we do actually hit it, or if the numbers are even higher than that, it is a government-supported number. We have the government subsidizing the housing industry, to subsidize the auto industry with cash for clunkers. So we had a lot of government intervention with that number. So it wasn't just that the economy rebounded. It really was the government came in and gave people incentive to do business. So an asterisk will need to be put by that number, whatever it is. Obviously, we should all hope for a number that's above 3%, and my worry on that number is if it comes below 3%, I think we could see some selling caused by that.
Actually, the more telling numbers may come out on Friday with September personal income and spending and consumer confidence numbers.
Right, and the consumer confidence numbers are always interesting. People will say one thing and then do another one. We'll have to see how personal income is and also how personal spending, whether people are spending. Again, there's an assumption that the consumer has been weak. We have seen some retailers that come out with September same-store sales and actually said they were better than people thought. So some people are spending, but again, the consumer still is strapped. Unemployment's still running high, so it's not going to be a huge improvement. But I think when you look at retail sales and when you look at personal income and really personal spending, it's really a matter of how does that number match up versus expectations, not what does the number look like on an absolute basis.
All right, companies that could surprise to the upside as well as one that could surprise to the downside also contained in this report. You may view the text version of it by going to Zacks.com's homepage, scrolling down that homepage until you get to the headline next to Charles' picture, and then clicking on that link. With Charles Rotblatt, I'm Terry Ruffalo.